Joining us now with his tips is Daniel Geltrude of Geltrude & Company accounting firm right here in the great state of New Jersey. First off, did my point about the letter thing make sense? Like the play on words, maybe no more audits, but I think there's going to be a lot more letters, which can scare people.
Yeah, it absolutely does. Look, the IRS is sending letters out all the time. Doesn't cost that much to send out a letter. But now you're putting people on notice. It starts to scare people into compliance. That's part of the propaganda that the IRS uses.
Yeah, and there's no way. You got my point, too. I mean, you're not going to hire some new IRS person and then tell them to go audit a millionaire. It's not going to happen.
No.
They don't have the skills and the experience.
No, they don't. So to say that these new IRS agents are only going to be focusing in on the wealthy, it's simply not going to be true.
It's not going to be true. Anyway, okay, so we got 3 red flags about we don't want an audit, okay? First one, we'll just breeze through discrepancies in info. I think we can all agree on that one. Make sure your basic info is correct. Number 2, which I think is interesting, large deductions or credits. COVID gave us a lot of crazy credits, right?
Yep.
CARES Act, you could take out from 401k, blah, blah, blah. That's a big one for an audit.
It absolutely is. Look, when people are taking large deductions, let's say you had $100,000 of income and you're taking a $70,000 charitable deduction, red flag, doesn't make sense. Well, you'd be surprised what people put on tax returns, and many times the IRS doesn't catch it. Happens all the time. But look, the IRS right now going after a lot of people related to that COVID money, like the PPP, Paycheck Protection Program. Yeah. Billions of dollars of fraud. They're recouping that money.
Dan, tens of billions.
Absolutely.
Let's be clear on that. But that's a different topic. That's a different topic. So let's say great Aunt Edna dies and she leaves you a little bit of money, okay? And so you say, I'm going to make a $70,000 donation. I make $100,000 a year because I got all this money from great Aunt Edna. Your advice is, even if you want to donate the 70, don't do it all at once.
Well, not necessarily. Listen, the key to this whole thing, Brian, is documentation. It's okay to be audited as long as you can prove your deductions. So if you want to make that kind of charitable contribution, make it. Just make sure you have everything properly documented.
Number 3, failure to report all income. But how would that even be? Now, for a W-2 employee, it's impossible, right? Unless you've got like a rental apartment or something. How do people forget to report all their income?
Well, let's not forget there's a lot of people out there in the gig economy.
Sure.
So they do have their W-2 income, then they got all these side hustles, not declaring all that income. Maybe they didn't see the 1099, but the IRS got it. Now there's not a match. Here we come.
Do you think that audits or letters are going to go up?
Yes.
Yeah, they have to, right?
They have to.
And by the way, if somebody owes, people should pay what they owe. You would agree with that?
Absolutely. Absolutely.
Because then you're just cheating everybody else.
Absolutely. Listen, we can't feel bad for tax cheats. They owe the tax. They got to pay it. But listen, this is about return on investment. The IRS sinking a lot of money into this $80 billion. They got to get a return. If they can't get it from all the rich people, guess who's next in line?
Well, we're going to have to do it. This is not like Mo Green, or Henry Hill we're talking about. These are like regular citizens. Dan Geltrude, really appreciate your time.
Thank you,
I know
Brian.
It's a busy season for you.